Nigeria is introducing a deep offshore oil and gas project incentives, a single rules-based framework to unlock about $50 billion capital into deep water fields. Meanwhile, the government is stepping up efforts to attract private and multilateral capital into its gas sector to address infrastructure investment shortfalls in the gas sector. Well, Oyeyemi Oke, partner at AO2 Law, joins me to discuss this development. Thank you so much for your time, Mr. Oke. Let's look at where we are in terms of how the government is pushing to attract that investment. Once upon a time where we saw IOCs leave the country and, sell their stakes in the country. Let's look at what this new framework would do in terms of attracting them. Once upon a time, it was a case of, based on the wells, on the wells per basis. But now we're seeing this kind of legislation that would give them the room to plan 10, 20 years.
Thanks for having me, Aki. I think the points to correct is that IOCs are still in Nigeria. Perhaps the terrain in which they now operate is particularly different from what we had when they started the divestment in 2010, right? Now, I think the focus on IOCs is on deep offshore terrain, right? Which perhaps there are the big barrels there or the big volumes if you're talking about gas. Now, in terms of what the new incentive that has been introduced by government about a few days ago, what it means for Nigerian oil and gas space is that there's a likelihood that the incentive or the new incentive regime, which has been introduced, will most likely boost further investment into the deep offshore terrain, right? In Nigeria, we've seen projects like the Bonga project with potential investment of about $10 billion stalled because of the fact that there's lack of clarity with regards to incentives in the deep offshore terrain. Now, we now have, as a consolidation or, furtherance to what I would say other incentives that were introduced by the Nigerian government in 2024 with regards to the fiscal incentives and the cost efficiency incentives in 2025. We now have another incentives executive order that is largely focused, or I would say 100% focused on deep offshore investment or deep offshore operations. And I think that these I would say concentrated or specific order with regards to deep offshore investments or deep offshore activities would definitely bolster investments in the sector, right? If you take a deep dive into the specifics of the order, you will see various incentives such as the standard production tax credit, supplementary production tax credit, and the profit oil reset. These are actually good incentives, right, that would definitely encourage investments in the deep offshore terrain.
And looking at the $10 billion Bonga oil field, this is supposed to be the first in terms of testing the validity of this framework.
Yes, it is. It is. But beyond, one thing we should also bear in mind is that beyond the legal framework which we have by virtue of the executive order that has given these fiscal incentives, right, for projects such as the Bonga project, I think there will be other things to consider, things around the economics of the project, things around project design, and also partner alignment with other partners of I think, SNEPCO, right, on this asset. So it goes also beyond, or investments also go beyond perhaps the legal framework which we have now, and all other things such as project economics and project design also need to be considered. But I think the important thing is that we have a good framework that supports this type of investment that has been introduced by the Nigerian government. So hopefully these incentives, when fed into the economic model of these operators, hopefully the project economics becomes favorable for the purpose of making FID with regards to projects such as Bonga.
Which leads me to my next question, how this new framework would help in driving FIDs. But thank you for shedding light into that. But one other area we have to look again is at the time when we saw IOC sell their stakes here in Nigeria, we saw that rise of local players take up responsibility and own that space. And then the push for local content was also top-notch. Let's look at how this new framework balances both working side by side.
Yeah, I mean, so what we should bear in mind is that the portfolio rationalization by IOCs has led to what I'll call new players or emerging players, right? I mean, we have players who have been who acquired the first set of IOC divestments as far back as 16, 17 years ago, and that's almost 2 decades. So what it means is that we will definitely have indigenous participants, right, who would also be looking to venture not only on the offshore, I mean, onshore and shallow water space, but also, I mean, I'm certain that certain Nigerian operators also have assets in the deep offshore terrain. So while this may look as an investment, I mean, as a framework that is targeted towards attracting IOC investments, let's bear in mind that we also have Nigerian indigenous players that are also playing or operating within this space, right? Which means that also the Nigerian indigenous capacity with regards to deep offshore investments and also operation of deep offshore assets will also be bolstered. What it also means is that Nigerians would also have the opportunity of taking advantage of the incentives under the executive order.
Well, let's look at on the gas space what the Nigerian midstream and downstream gas infrastructure fund is also saying in terms of how to unlock that space and attract the needed investment as well. Let's look at how all of this, the body language from the government would help boost investors' confidence.
Yeah, so the Nigerian midstream and downstream infrastructure fund has been quite helpful, right, with regards to investment. But I mean, in my experience and what I've seen, perhaps maybe the focus has not necessarily been on the upstream side with regards to investment or the target of the fund, right? What I've seen the fund do is perhaps there's been a bit of skewed focused on the downstream side, and perhaps the reason for this may be connected with the fact that maybe the quick win is delivering of or delivery of gas to end consumers, but this does not mean that the MDGIF hasn't tried. I have been involved in transactions whereby they've supported gas projects, like I said, albeit on the downstream side. Based on available data, I think the MDGIF has invested in about 30 projects, right? Some of those projects have actually commenced production and commenced sale to the public. So the MDGIF has done well, right? But again, the MDGIF is supposed to be a support fund, right? Not necessarily the primary fund with regards to investment in the gas space. So what for patient capital, private equity capital, and perhaps I would say long-term financing from international financing institutions as well.
All right. Thank you so much for your time, Mr. Oke. That was Oyeyemi Oke, partner at AO2.